Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Friday, June 3rd, 4:17 p.m. New York time. U.S. stock markets close. We just finished the first week of June. Let's look at the weekly time frame. First, look at the equity indexes, also called stock indexes. Weekly candle for the S&P 500 was red. Hit a higher high, higher low. Small trading range, real small candle compared to the prior week. Huge impulse move up, which is a bullish engulfing candle. The bottom of a trend, that's bullish. And was not surprised we made a higher high, higher low. But the small trading range, well, now we might be building a flag pattern. Yep. A pullback to the midpoint, one could consider looking for a potential trade idea as a demand zone. Yep, putting bull put spreads down here. Unless it breaks, then it's different. Look at this. We're still working our way up in this Fibonacci retracement. As well, zoom in. This candle, that huge wick, we had all the sellers. Well, this candle here closed above that body. So we're grinding slowly into a retracement of there, which is just below this blue line, which is the 618 of the Fibonacci. So that's maybe where we're heading to. We'll see if we get up there next week. And that might be the place where we blow off and roll down. NASDAQ one, very similar, just like the S&P 500. Red for the week, higher high, higher low. Yeah, very similar. Dow Jones Industrial Average, again, very similar. Red, higher high, higher low. Dow Transports, we did break above that inside candle from last week. Small trading range. Look at this consolidation, breakdown consolidation. So still working staircase pattern, lower low. And the Dow Utilities, inside candle for a week. Interesting. Yeah. Bigger trading range too than the prior candles, but building consolidation there. And the Russell 2000, very similar to the other equity indexes. So who's the overall leadership on here? Well, obviously not the Dow Utilities because it's stuck inside the range from last week. But they all had that similarity of small trading range. Why? Because it was a short trading week. Monday was the U.S. holidays. Not surprised the current weekly candle is smaller. Yep. But also those smaller candles, again, right next to those long impulse move ups, all potential bullish patterns to want to go higher. Let's look at the 11 sectors inside the S&P 500. This will help break down and define to understand what's the best and what's the worst sectors. XLK, that's the technology sector, makes up 20% plus of the S&P 500. No surprise, looks very similar to the NASDAQ 100. Yeah, again, staircase pattern, lower low, and small trading range. XLV, healthcare, makes up almost 15% S&P 500, but it is weaker than the indexes because it made a lower high, lower low. Yep. So you've been better off doing those indexes I showed you. XLF, financials, makes up 13.7% S&P 500. Very similar to the other indexes. Yep, higher high, higher low, small trading range. XLV, consumer discretionary, makes up 10.2% of the S&P 500. Just an acceleration, still staircase pattern, lower low. XLC, X-ray Lima Charlie, communication services. So red, higher high, higher low, doing a retracement of that big wick. XLI, industrials. That's good. It closed green. We don't have too many that closed green, but it closed green for the week with a higher high, higher low. Prior week was a bullish engulfing candle. So again, we're looking for this to continue going higher. Potential during the retest, the high of this candle, the huge wick. And that's where a lot of them may go to, and then we have another blow off. We'll see as we grind up there. XLP, consumer staples, 6.7% S&P 500. 2 weeks in a row, inside candles. And this one's solid body, equivalent to a red. XLE, the energy sector, 6% S&P 500. Well, it made a higher high, higher low. And closed above. Strong like bull. Outstanding. The energy sector. I can say so much about that, yep. So I'll just say simple, simple, simple. Most states, United States, or let's just say every state, United States, has multiple power plants where your electricity comes from. And what's the number one energy source those power plants derive their energy from? Coal. Then oil, natural gas, some nuclear, some renewable energy. So a majority of them use fossil fuels. So now they're at the wind of the game. Fossil fuels, i.e. coal, crude oil higher, they pass the cost on to customers. Because the past and present legislation of Congress, president, and the governors, because the governors got a lot to do with it, have not mandatory required power plants to be upgraded 100% most efficient tools, technology, as well to be able to use other alternative energy sources like clean, usable energy. So some states have better opportunities to use wind. Some have better opportunities to use hydro dams, solar. The point is, those are free. Wind is free. Solar is free. They don't ruin the environment. And they're reusable. You can't reuse natural gas, coal for the same purpose. So if those power plants, all those years during the Afghan war, all that money was invested in the power plants in the United States, just think how much more efficient our utility services would be and how much lower your electricity bill could be. Because again, those would be much more efficient versus I don't see solar or wind prices going higher to have to pass on a cost. No. Yeah, not versus the dependent on dirty fossil fuels. So again, you got to call out the knuckleheads on both sides, the Democrats, Republicans. Neither one has come forward to be all in to get some cojones to speak up about this. So why would you vote for either one of those two suckers? Okay, enough on that. It's shameful sponsoring either one. XLU, utilities, 2.8% inside candle for the week. But that's interesting too. So you had the impulse move up, retracement deep with a long tail. So we could see this break out to the upside. XLRE, real estate, higher interest rates taking a toll. We have the U.S. Federal Reserve leadership and both administrations still support that policy, raising interest rates. That's the worst thing to do Yeah, that's the worst thing to do. It hurts the most amount of people, the fastest possible. It's not going to be helpful, the best. Yep. Because the US permits past and present, both knucklehead administrations, politicians, political parties, allow the banks to have huge leverage, loan out more money they have, and keep the upfront capital required for loans, mortgages, home businesses, cars. So of course, more exposure, more risk. There's so much into that. Again, when you do a huge leverage, you're not living within your means. But again, they want to loan out the most amount of money to financial institutions to make the most amount of profits for the shareholders, which is putting the most people at risk. Yeah. Yep. Just think if we got rid of the income tax 100% too and just had a consumption tax, because it's not good to tax people on their income, what they're earning, tax them at the consumption level. But again, neither party is serious what they're doing. They just run for office to stay in power and get that money from the lobbyists and do their own little selfish things. Shameful supporting either of these knucklehead parties. XLB. Materials, 2.5%. Green for the month, higher, 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 low. Okay, let's go look at Faang. So one of the reasons I show Faang plus stocks are the majority of the indexes are heavily weighted into these stocks. Yeah, you think these stocks are heavily weighted in Dollar General Store, Family Dollar Store, or heavily weighted into, these stock indexes, regardless, mutual funds, you think the majority of them are invested in GameStop, AMC Theaters? Nah, they're mostly invested in the high-tech stocks. So when those high-tech stocks fall apart, the indexes move in that direction fast. Apple, red for the month, made a higher high, higher low. Sorry, red for the week. Higher high, higher low, closed back inside that prior candle. It's in bad shape. It also took out the swing low there. Let's remove that, which is the low from 2 years ago. It's in bad shape. Again, it's not just them. Again, they have components from other manufacturers, and there's also government policies from abroad and stateside. Bad leadership, past and present. Microsoft made a higher high, higher low, closed red back inside the prior week. It's struggling. Amazon. Well, it took out that swing low. Swing low all the way from back there. Let's remove that. What's interesting, it did green for the week, made a higher high, higher low. That's good. Well, it is a retracement, still an consolidation. Yeah, it's weak. And just retracements, that's what it is. I'm still expecting after these retracements, we're going to have another flush on the markets and go lower. Facebook, red for the week, made a higher high, higher low, closed back inside there. Again, it's struggling, it's in terrible shape. Google took out that swing low from all the way back there. Let's remove it. Where it popped up, did green, higher high, higher low, and then sold off. Look at that big wick it made on top. Yep, it's struggling, couldn't even close above here. Tesla, Tango, Sierra, Lima, Alpha, red for the week. Ran up, sold off, deep retracement in the prior candle. It's not good. November, Victor, Delta, Alpha. Yeah, another one. Just popped up, sold off in this consolidation. Slow grind down. Netflix, green for the week. Higher high, higher low. So coming off the lows of the year. Yeah, bad shape, bad shape. And Bravo Alpha, Alibaba, big Chinese company, huge consolidation there. Yep, we'll see if that breaks out. So break above here, might get a bunch of new buyers, run up to the 125 levels and break over that. And right down here, we could be doing bull put spreads, making weekly income and monthly income. Many thanks for watching.